The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Secrets out of the bag.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
What's going on, everybody? It's Dan French here. It's the French Workbench Podcast on a Saturday at 10:30. It's our new time. Thank you guys so much out there for tuning in. We're the most real and behind-the-scenes information regarding financing, real estate, money talk, also entrepreneurs when they come on here in Las Vegas. I'm your host, Dan French. I have my co-host here, Mr. Brett Jenny. Thank you guys for tuning in. We have a great show today. We're going to talk a lot about what's happening with the housing market as far as home sales are down. Why are home prices still up? So I want to talk about that. I also want to talk about with lumber costs coming down, what's the impact on that for buyers, and what's really happening with builders now that they're really soaking up that cost when they bought homes with lumber, and now they're selling it and they have to discount it. I've seen one property reduce $60,000 price reduction. I also want to talk about what's happening with the euro and how this is first time in 20 years the euro has dropped below the dollar, and I'm going to talk about that with you guys here, my co-hosts. Let's go over here. Brett, Jenny, what's going on, buddy? How are you?
What's happening, Dan French?
How you doing, man? How's life?
It's hot out.
Hot out?
Hot as HE double hockey sticks, man. I mean, we're, in the desert. We're in the desert in July.
Dude, that didn't stop you from doing like a 10K before you
I didn't do a 10K. I only did like a 7. No,
yeah. Right?
No,
Right,
I walked most of it this morning, man. Like I was talking to my dad when I first got here. It was like 8:30 in the morning. It was already 100.
Where at?
Here. Like I pulled in the parking lot because I go for a run before the show starts.
Oh, yeah?
Show starts. So yeah, it was like 8:30 in the morning, and it was like already like 100 degrees. So I walked most of it, but I did some running, and it was as hot as I thought it was.
Yeah.
You know.
If you guys don't know who the other familiar voice is, it's Mr. Doug. What's going on, Mr. Doug or not?
Good morning.
Doug Liebig.
Liebig. Yeah.
There we go, Liebig. Living La Vida Loca.
Living La Vida. Dude, it was your birthday, right, Doug?
Yeah, last weekend.
Dude, where'd
What
you
did
go?
you turn, 27?
Yeah, actually 40.
I'm a new favorite person.
Did you go to the library, or what did you do?
No, we went. Did a little studying.
Did a little studying.
You did a little study. Your wife, did she go to the library too, or it was just you by yourself?
She doesn't do the library.
Yeah.
I know
that's a
some
young
wives
man's
like
game.
to go along with their husbands to the
Well,
library.
that's the code word, right? Hey, we're going to the library. Yeah, we're going to do some studying on real estate and
Dude, the first
home
time I heard
inspections.
that, I had a guy working for me. He was an old Harley dude, and he was a Vietnam vet, and come on his bike, and he goes, "Yeah, I'm gonna take off to the library." I'm like, "What the fuck?"
Yeah.
Had you just moved here, or you
No,
just didn't know though?
I didn't know it was. It was
you knew
when
the
the
place, but
library.
you didn't know that's how you referred it.
Yeah, it was when it first started up.
Yeah.
And so I looked at him
library.
like, "Library?" I said, "What the hell are you doing
Something
there?"
about
AJ?"
you and books doesn't add up.
Yeah, no, right? I mean, you don't look like a reader to me, you know?
You look like you can barely form 2 sentences together, dude.
And he goes, "Dude, it's a strip club." I'm like, "Really?" I'm like, "Yeah."
library.
Okay. All right.
See, my thing is this, man, is that everybody wants to not talk about them going there or like hanging out. I don't know if it's like taboo or something, but it's like there's some people that don't care.
Yeah.
But I mean, there's probably people we don't know about. You got people come into town, they want to have a good time. They go out and they go to a strip club, or they go somewhere like that, or they go out not on the town. So, you being that you're now 27, I would think that you'd be hitting the clubs, hitting the strip, going to the
Still a young man's game, right, Doug?
Living, what is it? Living La Vida.
Dude, so
Look of La Vida or whatever.
I want to bring something up. So it's a sad day out there for people. Couple of Texas Station and also Fiesta Station, the station
I saw
casinos, are going to be imploded and they're going to sell the land. And it's like, when I first came out to Las Vegas.
Yep, they were a staple, man.
Dude, I would go to the
Me too.
Texas Station Fiesta all the time. They had the best, like, cheap food. Buffet.
Texas Station. I used to go there all the time when I first moved here. Yeah.
I can't believe they're taking I didn't
Dude,
know that.
So they closed down, during the pandemic, and then they just never reopened,
That's
right?
true,
They just couldn't recover, I guess.
And
or it just wasn't worth it for them to.
Yeah.
Probably.
The Fiesta down there in Henderson, same way.
Because those are station casinos,
Well, I mean,
right?
look, they're going for, got the Durango Resort Casino coming up on the 215, obviously, in the Durango area.
Yeah.
So I think they're trying to go to that whole model thing, like where it's that new,
Well, and what station casinos are owned by Fertitta Brothers.
Right.
So they do their homework.
Yeah.
Right? They don't make bad business decisions, so I'm assuming they...
Yeah, but if you're selling the land, like, how much are you really going to make off that land? The
Dude,
land.
Put a sports
Let me say
stadium
this.
there.
Well, here's my thing.
Well,
why wouldn't you consider renovating it and maybe changing?
Because I'm sure, like I said, and dude, the Fertitta brothers know how to do business, and they probably went over the numbers and said it's just not worth the hassle.
Do you have any memories of going to Texas Station? What's the last memory you have of Texas Station?
I think I went there when I first moved out here, like my first 2 years. Everything I had in the back of my car. Seriously. And it's like 09. Did
you just set up shop in the back of your car or what?
Basically. I mean, there were, and you know how it was in 09. There were like 25 agents that did all the real estate here because they were the foreclosure agents.
Right.
Yeah.
So the rest of us weren't making any money. So, I mean, I literally stayed at the budget suites on Lake Mead and Rancho for like the first 2 years I was out here, living week to week.
Yeah.
Right. And I remember going to Thanksgiving. I think it was in 2010.
Yeah.
Over there.
Yeah.
So that, man. But I used to go over there all the time because the buffet was super cheap and you could get a lot of it. And
Did you ever go to the Fiesta or the Texas Station?
Oh, yeah.
Did you?
Yep. We went there quite a bit, actually.
What did you go there for?
Well, we went there for conferences. I went there. I bowled there at the Texas.
Yeah.
Same with like Samstown.
What's your last memory with your family? Did you go there with your family?
No, I didn't go there with the family. No. When did we go? We went there for. God, I think it was like I don't know. I think it was bowling.
Bowling.
Yeah.
That's like Boulder Highway. You don't go on Boulder Highway with your family. You know what happens
on Boulder Highway, Brett?
You know what happens on Boulder Highway?
It's the same thing that happens
Hookers and
on the
blow.
Tropicana next to the Orleans.
Do you know what happens on Boulder Highway? Do you know what happens on Boulder Highway?
What's that?
Nothing good.
Yeah.
Dude, have you been down to the Tropicana next to the Orleans? Dude, people make videos where they're just walking by and they're just like, all right, I want you guys to pay attention. And they just kind of like, here's one,
Dude,
here's one.
I've seen so much shit in town, man.
Yeah.
I usused to work late nights, right?
And
I used to work. I used to work the like we'd have concrete pours. I go out and I do a concrete pour, like 11 o'clock at night. And
No kidding?
It'd go till like 1 o'clock or 6 o'clock in the morning.
Wow.
The shit that you see at night.
Oh, dude, I can
around
only
town.
imagine.
And I always tell my kids, I'm like, nothing good happens after midnight.
The thing about Las Vegas
nothing
is like,
good
so during the
happens
day,
after
there's already
midnight.
its own element, but this town at night,
Oh,
it's
dude.
completely different city. And
Dude, we had a couple-
That's when Vegas really comes out.
We had a couple. We were pouring a deck over there at what was that? Flamingo Station, I think, over at on the monorail. Had these two hookers and this old guy. These two hookers are holding him up, and the guys up on the deck. All the guys pouring concrete. They're catcalling these two gals. Whatever. And
What, construction guys catcalling?
oh yeah, whatever.
Usually just gentlemen.
Yeah, but anyway, they flip their little skirts and give them a bed over show and
Give them a show.
And then the other one turns around on the other side, and it's funny because the pump truck operator, he was running the hose by himself. I mean, there was nobody at the end of the hose. Everybody's like over there looking at their little. And the other one turns around and she drops her top and she's like, And then you got the little.
So you got a free show then, basically.
Oh yeah, there was a free show.
No money involved. Just stay, man.
Just walk around and get a free show anywhere in this town. I mean, seriously, you're always going to see something.
Yeah.
I mean, you think about that. It's like
I know.
we're so used to living here, but like when I first moved out here, it was just like you notice everything, right?
Oh, yeah.
Such a difference,
Yeah.
especially from smaller town Midwest, man. And now,
where are you from, though?
We'll get to that.
I haven't heard this in 2 weeks. I just need to know your city. Where are you from?
I'm from
Michigan, isn't
Come
it?
on.
No, I'm
Bring
from,
it out.
I'm from Florida.
Florida.
I just wanted to hear it.
I'm from Alaska.
Wisconsin.
I'm from Hawaii.
I got to hear it once
I'm from
a week.
Hawaii.
2 weeks.
The Big
We
Island.
weren't on last week, so I had to hear it.
The Big Island. So long and short of it is you're getting me distracted. So, but you know what I mean? Like you drive around now, and anywhere you drive at any given time, if you're going, you just see so many things you don't even process anymore because you're so used to it.
Well, nothing's
you're just
a
like
surprise.
it takes a lot to like really get my attention now.
Yeah,
and it's crazy the shit you see that is just you don't even think about now. That is, to most people it'd be like.
How long you lived here, Doug?
27 years.
Okay, so you've seen all the changes.
He's seen
right?
his fair share.
Yeah.
He's seen his fair share. And obviously you didn't leave because you liked it. You know?
Hey, work was good. You could always get work. And the other thing is too is like I started the home inspection business in 2000, and that was like, to start a business in this town was fairly easy,
That's what's awesome about Las Vegas.
And not anymore, though, right?
Now, I don't know. I
mean,
haven't started a business
It's
lately.
easy to start, but the competition is a lot bigger.
Well, I'm
I would
talking
say.
about on the jurisdiction side of things, because like the taxes and all
Nevada
that.
is super. I mean, it's
I
one
got
of
a
the
buddy of
easiest-
mine.
Yeah.
I got a buddy of mine. It's a
States,
landscape contractor up in Oregon. They actually incorporated down here in Las Vegas and for Nevada.
Yeah.
Because they were taking like 48% taxes on them.
Jeez.
Yeah. So it's like
In the Northwest?
up in
That's
Oregon.
weird.
Yeah.
Well, I want to get into the show here for a
but-
second. Let's segue. So, you guys got anything else to say
Hey,
about
ditto,
it?
I
digging
think,
there on that.
California just moved up
Yeah.
into Oregon and Washington. They
Same
just
thing,
carried
dude. My book.
the shit.
You guys, so let's get into the topics here. So first off, I want to bring up a couple of things here. If you guys don't know out here, I am a real estate agent. Brett's a real estate agent. And I want to bring up a couple of things.
That is
Let's
neither
not-
Dan or I.
No, but I want to bring this up. So hold on, Brett. So first off, I want to say, guys, we're going to go here and I'm going to introduce a couple of businesses. Well, actually one business and then my business. First off, I want to introduce you guys. If you guys out there looking for somebody that is looking for a good dentist, somebody that would really help you out, gives you that red carpet service, I want you guys to go over here to D for Dentist. And I want you guys to look at this website here. It's the dfordentist.com. I want you to check her out. I've heard nothing but raving reviews. I've been there myself. I can attest that it's a very great experience. Going in there from A to Z, they make you feel very at home. So if you guys are out there and you guys really want to check out a different dentist to maybe start going to, that would be a good opportunity. You can also check them out. I'm going to come back here just real quick. Look at this. I want to show
We
this
started
out
doing
here.
sponsors.
No, it's not a sponsor, but it's a plug. So I know this lady, and I want to just give her a plug because she's a very good person. And so on Instagram here, we also have D for Dentist. If you guys want to check this out as well, I would highly recommend at least following them because they always have updates on specials and things that's going on. So you guys need to check out D for Dentist. Okay, I wanted to plug them. I'm not sponsoring with them. They're not sponsoring me, but I wanted to let you guys know it's a great place. My whole family goes there. I know other people that go there, so please check them out. They're top-notch place to go for any type of dentist work that you need. Invisaligns, big deal right there. I wanted to pitch that. So let's go over here, and I want to bring this up. This is also my website, lvhomeprofessionals.com. I want you guys to go here. If you guys are looking for a home, this is a great place to get started. And Brett is also a real estate agent too. So Brett is very knowledgeable in the real estate world. So I'm going to bring this up here, and you guys see that this is a great place to get started if you're looking to buy a home. LV Home Professionals, check that out. Also, if you guys are looking to get on the show and you guys want to register, if you're too scared to come on video, hey, that's cool, no problem. But we want to try to see if we can get you guys registered. We'll set up a time in the future. We'll kind of discuss back and forth if this is something you want to do. And then we'll go from there. But this is a great place to possibly get started if you want to promote your business and you guys come on the show. Usually it's a Tuesday thing, so it would have to be Tuesday at 6. We'll have you meet and greet with everybody in here. Also, I want to introduce that we have these same links in the comments section, but I want to bring this up. If you guys are looking for home price reductions, man, I'm seeing it across the board right now. Tons of productions.
Big time.
We have all the links. Each link has its own purpose, right? So this one is home prices just reduced. Open houses we also have coming soon that's not on the market. Also looking to sell your home. I want to help you sell your house. It's harder today to sell your house. People have an unrealistic idea about what they can sell their home for. I've talked to 7-8 agents just yesterday, Ask them about, hey, have you had a price reduction? 25, 30, 40,000. Not all of them, but I'm going to say most of them. Yeah. 6 out of 8 had a price reduction.
No, that's about right. That's about right.
Then also, too, we're going to go over here, and we're going to talk about this here in a second. But that's it, guys. So let's go ahead and talk about what our topic or topics for the show are. So June housing data shows why we needed higher rates. We need balanced growth, steady as we go, slow and steady. That's the case there. And I think you look at the problem with 2021, we ended with low inventory. We now fast forward to today, right? Mm-hmm. Homes are up. Home sales are up 134%. You got 34% increase in total homes on the market. And this is not a credit bubble that we're looking at. We just needed higher rates. Now, we have them north of 6%, but it's at 6%, we slowed down the economy here.
Did they come down this last week?
They did a little bit.
Okay.
But we've seen it north 6%.
Of course, yeah.
And the national average is very close to being that 6% mark, especially if you look at the discount. You can go to FreddieMac.com and you'll see it costs you a 0.8 in discount, almost a point to buy down the rate,
listen,
right? So it's a big deal.
You want to even the market out more? That's what you do.
100%, right?
It works, and it worked. Like,
Yeah.
you know, I mean, like, let's say, for example, just one builder in specific, not to point out fingers, but let's say a builder like Lennar. Where 3 months ago, Lennar wasn't even paying commission to agents, right? Let alone we've got 100 to 150 people on a waiting list. Sorry, agents, we're not paying you commission now. We don't need to, blah, blah, blah. I just got an email yesterday from Lennar offering 5% commission for agents, and they had literally 3 pages of standing inventory that they're all willing to negotiate and and are dropping their price on.
Wow.
And we're talking about 3 months ago, they wouldn't even pay you a commission.
Wow. So in Las Vegas,
it went from one extreme to the other literally in 3 months.
Las Vegas has dropped 24% down year over year in median sales prices, yet we're still holding strong. And you still,
what do you mean? How are we holding strong if we've dropped 24%?
Well, I'm sorry, down sales 24%.
Okay.
Sorry.
Yeah, I was like,
Las Vegas sales are down 24%.
How the hell is that?
Year over year, median sales prices are up 20%, but they're still double digits.
Yeah.
So the total sales are down 24%, but we're still sustaining the double digit increase or price per home.
Well, that's.
Well, do you think the rates are going to stop that?
Yeah, absolutely. I mean, I don't see home prices going up really with anything anytime soon. Now, you know, I don't think it, you know, are we talking a year and a half, 2 years? Probably not, but I think it's probably going to be about 6 months, maybe 9 months or so before things kind of start evening themselves out, because what we've had in my mind is one extreme to the other. We had such a seller's market, and then the feds came in and basically forced people's hands.
Yeah.
And when you want a market to do something, and instead of just asking people, you just force them, because if you ask, people aren't going to, right? So forcing it is by doing what they do with the interest rates. Now we've gone from literally all these builders and all these sellers who are in upwards momentum with the market, or at least coasting pretty steadily, that just came to a screaming halt.
Well, I mean,
that's not good either. To have a screaming bloody murder mentality right now either.
Well,
it's
never good to go from one extreme to another.
Well, I think that the attitude of such an extreme so quickly kind of freaked people out, and people it just needs to be more of a normal balance for things, you know?
I would agree. I want to say this, and I'll ask you, Doug, but I think, you know, when you look at this market, the rates going up, the Fed's policy, right? Fed monetary policy. They raised the Fed's fund rate. They're probably going to do it again. We know that.
Yeah.
We know that rates have really suppressed the market. You know, if you have a trade-off, I'm probably going to go more inventory than lower rates, because builders overbuilt, because you got to think that that's probably going to lead to more of a healthy market. If you have a low rates, and like we did, and then low inventory, you're going to have a problem, right? Builders know that. So you got to kind of, what market would you rather have? Going back to the situation, though, I think if they raise the Fed's fund rate again, and again, that's short-term bonds, not long-term,
right?
And we continue to look at the geopolitical news. We continue to look at the what's going on with the jobs report. We continue to look at the economy as a whole, if it's slowing or not. Yeah. Our investors, our countries, right? Our big corporations going to start taking their money and putting it into the bond market more to slow to
Bond
store
market is never a good idea.
Well, it's just to store the money.
Just store it.
Just store it just in case something happens, because now, yes, rates are the cause of this. The last crash we had in 2008 was from the credit boom, right? We had a problem with credit. We don't have that. Now it's just rates. Right. If they do this again, will that push us down from the double digits in price purchasing down to maybe single digits? Because I feel if you get to single digits on those prices of homes, right, of how much they're selling, not double digit increases.
Right.
And then you have more supply. Rates are in check a little bit and they're not continuing going up. Now we have a balanced, steady as we go market. I think that's what people want, or at least economists want. I mean, what do you think about that, Doug? Have you been through something like that?
Well, I think we went through the whole, rise and fall of 2008, and it's definitely different than that now. I honestly believe, I think that what you need in a market like this is a tangible asset. I think. So
you're saying you need to buy a house?
Yeah.
Really?
I think.
Where's your psychological mindset for that?
Okay, so I listened to a guy this last week. It's pretty interesting talking to people, because I see you saw my schedule from last week. It's like
you talk to a lot of different people, a lot of different mindsets.
Yeah. And the conclusion I came up with is that from all these different people that I talked to, nobody's really confident that our dollar is going to last.
But we're going to talk about this in a second. It's strong though.
Okay, so it's like taking the least shit of all the shit. It's still shit.
But it's the biggest shit of them all.
Okay,
but that's declining though.
Yeah,
go ahead.
I mean,
yeah. So
you'd rather.
So again, temporary.
So the
long term.
The dollar, the DXY, the index is like at a 108, right? It's like dollars 108, 109, whatever.
Well, I mean, it's again, the euro was a standard, right? And we're going to talk about that in a second. But the economy, to me, with the dollar being strong, does show that for at least for exports or for imports, it's good. Exports actually having a weaker dollar is probably better for the exports or the companies that are exporting.
All the stronger dollar means right now is the other economies suck worse than ours.
Well, they're doing the same thing we are. This is more of a globalization because you got to think we're all connected.
But
ECB, we'll talk about that.
What kind of retract? Not to interrupt. What were you saying though about this guy?
So and it's no person in specific, but my thinking was on this is if our dollar is not going to last, you have to have a tangible asset, whether it's silver, gold, property, Bitcoin. Something that is tangible, and I think I've seen an uptick in home inspections. I mean, I'm just as busy now as I was before, and I think if you buy a house, if the dollar goes to hell, and you have a house, you still have a house. If the dollar goes to hell. And you just hold dollars.
I think a lot of
don't have anything.
And bigger players like that. I think the fear right now in the market is a consumer fear, and I say that I mean like the hedge funds. Like I have another realtor I know on the East Coast, and he's the primary buyer for the hedge funds.
Yeah.
And what they're doing right now is they're literally taking thousands of their homes right now as we speak and drawing the equity out of them. And they're rebuying them and doubling up on the homes that they're buying right now as we speak.
Yeah.
So why is that? You got to ask yourself,
because you have a
when the big money's
asset.
doing that, yes, why are they doing that?
Yeah.
So I think a lot of the fear we see right now is just basically a consumer and not necessarily on a macro level with the big hedge funds and the big investors. That's just what I've noticed. I'm not saying I'm right or wrong. I'm just saying it's what I've noticed.
What was interesting is I had a guy, when I had my engineering company, I had a guy tell me, he says, back in 2008, he goes, this is just the beginning of it. Mm-hmm. He says, our dollar, we're in an actual dollar bubble. This was back in 2008, and it's actually coming true now.
That's what I'm trying to say about cryptocurrency and Bitcoin.
Yeah,
it's like, okay, but you have to stick in fiat, but fiat is depreciating, and what you can buy with the power of that is depreciating literally every single year.
Yeah,
how long can that go on for?
Yeah,
I mean,
even if you could buy, if you don't have enough to put your money into a bigger asset, even if you could buy like 1-ounce coins, 1-ounce silver coins, whatever. At least you have something that's going to show your money.
All right, let's talk about this though, man. Okay, so yeah, you guys are saying that the investors are putting their money into houses.
I'm just saying what I've noticed. I'm not saying you should buy or not buy.
Let me explain. I didn't say you said that. Let me explain this. So
that's for the viewers.
I know. You're putting your money into houses, right? Because you're probably thinking shelter. Somebody always needs a place to live.
Right.
Okay. So yeah, I can see what you're saying as far as trading and the dollar. We'll get into that in a little bit, but I think the impact with people today and buying into homes, and you're talking about investors, it's not just hedge fund investors. These are corporations buying bulks of mortgage-backed securities, securitized in a lot of ways, and then they're buying them in bulk to collect the interest off of them. So people don't really understand the back end of what really happens there. But you look at this situation and you look at where we're at as far as people and investors putting their money, big investors, I just talked about this, there's 5 of them. They're doing it to store money as well. It's not just
store value.
Store value. Because look, even if the market does go down, let's say we depreciate 20%, 30%, they will come back, right? And it's the same thing as a bond. If you put your money in a bond, right, it's more, you're not getting the same yield, right? You're not getting the returns that you're thinking you're getting, but you're doing it because you're thinking, well,
we're at an inverted yield right now.
Yeah, well, the turbulence I see based upon the data and maybe inside and whatever people are telling you is there's going to be turbulence in the economy moving forward.
Yeah.
So now I'm not going to invest my stuff into riskier assets. So when you look at that and you see the housing market, like you said, and you said putting it into something tangible, I can see that from an investor standpoint. But if you're out there looking for a house as
that's
a
why
family,
I said the fear is more of a consumer.
That's
than
where
it is.
that's where the consumers really getting all that data and information from the media.
I get
and
it.
It's they're scared now with the combination of rising rates is putting people's mindset that we're heading for a recession, right? And that's the mindset everybody has, including real estate agents out there.
We 100% are. We're already in a recession.
I disagree with that. I disagree with that.
Dude, I mean, I don't see how you think we can't be.
Well, let me say this. Where's your data though that says we're in a full-on recession?
What? Well, how many quarters do you have to be down before?
Okay, so let's take that premise right there. Every day, every morning, I wake up and I'm watching CNBC. And they're going over the stocks and financial news. Every day they're telling me Jim Cramer's on there. We're not in recession. The numbers don't line up and blah, blah, blah. But then everywhere I go, things cost more. I go out to eat at Subway costs me twice as much. I go to fill up gas, costs me twice as much.
Yeah.
Home prices aren't going up anymore. I'm not saying they're crashing, but they're starting to be on the decline now.
Yeah, but
right?
slightly.
So
it's not like
rates
are barely.
Hold on.
This could take a couple of years for those rates to bring prices down to single digits.
I want to finish.
Go ahead.
Thank you.
Go ahead.
Man, you always lose my train of thought because you just gotta. So it doesn't matter. Everything that I see is costing twice as much, and I'm not saying home prices are crashing. I mean, I'm the first on this show to say we're not going to be crashing with the home prices, and I've got all static for it, but we're not. Regardless, this going up like this with the home prices, even if they're like this or dipping just a little bit. That's just one factor. Gas is twice as much. Eating is twice as much. To do anything is costing twice as much.
Yeah.
Interest rates just went from 3.5% to 6% in a matter of 3 or 4 months.
Yeah.
Everywhere you go, it's doom and gloom attitude, or things are costing twice as much, or we've got issues with that. That to me, it's more of a psychology and a mentality that we're in a recession. So I don't need specifically the economy and the numbers to show me that to know what I'm seeing around me. And I think every consumer sees the same things that I say. You can sit there and say we're not in a recession, but ask any one of our viewers. They're not noticing that they're paying twice as gas. They're not paying twice as much for groceries. They're not paying twice as much for everything. Of course they are.
No, I mean, listen,
So,
there's home inflation.
Let's do it this way. I would ask the viewers, how many people of our viewers feel that we're not in a recession and we're doing fine?
Well, I'm sick of hearing recession in nauseum as far as real estate agents and putting fear into people.
I agree with you 100%.
Because they're just getting numbers.
Dude, I agree with you. We're on the same page with that. Believe me,
Yeah.
I'm the worst. I'll be the first to say selling doom and gloom does not benefit anyone.
No.
You're just telling people what they already want to hear if they already want to hear that.
Right.
It doesn't make it a reality. You know?
So I try to go off of data, and I'm not an economist. I'm not somebody that goes out there and is like,
You don't
hey,
have
man.
your PhD in it?
No, I don't have my PhD.
I think some people will expect us listening to.
I think this.
No?
We can give
Okay.
some knowledge,
We're just
educated knowledge on what we have dealt with our experience.
Yeah.
And, we've had inflation markets before. There's been times where we've had inflation. This is not uncommon. We have more dollars in circulation. They're slowing the economy down. It's a process. They want to get it back to the 2% range. The ECB, European Central Bank, is doing the same thing now. As you see, everything follows what happens with us here. They're going through the same process now. Their fear of inflation. Now they're
worse
raising
off
rates.
than we are.
Well, in a sense, because now they're fearing that with the euro being below the dollar,
yes,
they're higher inflation. They could, with oil, it's backed by the dollar.
Yeah.
So now you want to get oil to go over to Europe. That's going to be a problem for them. It's actually a higher cost for them.
That's what I'm saying is our dollar being the highest it's been in 20 years is a sign that the rest of the world's doing shittier than us. It doesn't make that things are going better and that we're all of a sudden overtaking everything and we came up with a great game plan to be ahead of everyone.
Yeah.
It just means that they're worse off than we are. But that doesn't mean that anyone's in a great situation.
Yeah. No, none of us are.
So my thoughts on this are this, is people are thinking that this market, and you guys out there, I want to answer your guys' questions here really quick.
What are they asking?
Well, real quick, shout out to Ver. Ver's over here. Ver Star, baby. He's always on the show.
So he's running an altitude.
Yeah, I want to bring this up real quick and answer some of this stuff. So running altitude, so there's still a balance between supply and demand. I don't see a crash coming. I would have to agree with you on that, and I want to bring that to you, everybody out there. I think running at altitude makes a good point. Bear Stars at the DMV waiting it out, it looks like, I guess. You've been there all morning. Good luck to Vera, right? If you guys have any questions that you guys want us to answer in real estate, financing, or even a home inspection, anything that you guys have, we would love to answer. We also want to talk a little bit about what's happening with the economy and the market. Anything that's really hurting you guys or you guys have questions on that, maybe we can just give you an insight. We're not economists. What?
Bear says, should I focus on raising capital or wait to get burned? It doesn't sound like a question as much as a statement.
Right?
Fair.
That's funny.
I mean, that's not a question.
DJ, shout out to DJ. He said America West is now paying 6% closing costs instead of 2% if you are using their lender.
Yeah.
Now, again, builders, look, man, let's just talk a little bit about that with these double digits. Builders got affected big time. And so when you look at what happened with builders and lumber, I want to talk a little bit about lumber and how it coincides with some of the stuff we're talking about. If you had lumber where it was like $1,000, I think it's per board square foot.
Linear foot. Yeah.
Linear foot.
What was it?
It's board lumber.
Foot. Yeah. But what was the price?
Well, they had it last year. So for every, I think it was $670 total cost for a builder, it would translate into $18,000 increase on home purchasing for the buyer.
670 board feet.
Are you serious?
So if they had to pay 670 board foot per board foot, cost of lumber last year, now into this year, now we're at like 400. But you got to think that would add like $63 to your payment just on lumber.
So the builders already paid that price, but now the product for them to sell that price isn't there.
Well, think about it like this.
They
price to
pulled
sell
the rug out from underneath them.
So now you're looking at it going, okay, so you have that cost.
Yeah.
And you have a builder reducing prices 60,000, 40, 50, 60,000. They probably paid that lumber and premium. Are they really taking a loss on this? Or are they really just trying to salvage?
They're trying to salvage. They're not going bankrupt, dude.
It's not bankrupt. How much are they losing on it though, based upon what they? Because look, let's talk about this. So if you went to 1,000, right now you're saying that's only what $36,000, right? Let's just say it's at 1,000 at its peak.
Okay.
That means that the average builder out there for the cost of just lumber would increase the purchase price $36,000, right? Based upon what they're buying.
What they're paying for the lumber.
What they're paying for the lumber.
Yep.
Now, where are these lot premiums come in? Okay, so now you're like, okay, well, Summerlin's $250,000, right? Some of them are $100,000. Maybe you can add some stuff in there like, hey, we're paying these contractors because it's a little bit harder. But was that just an excuse? Because I was talking about this on another podcast. These builders got chin checked. Sellers are getting chin checked. Even though we have double digits, prices of homes still selling.
I think the builders may have exploited it a little bit to the point where they're pricing in something like this happening. Or I should say, hey, we might take a little more off the cut right now for these 2 years.
Yeah.
Because we know that at some point,
yeah, but they can't forecast. They can't forecast.
You're right. They absolutely can't.
6% rates, Brett.
Absolutely, they can't not. But what I'm saying is, just in an overall business plan, especially if you're a national builder, I'm sure you factored in different markets and things that happen and cost average and a whole bunch of different ways that they approach things. I don't know what their formula is. I don't know how much they made or didn't make. I'm just saying, as general business sense, if you can make a little more profit at certain times, knowing that down the road things aren't always going to be that way, and you can have that there in reserves for this. So I don't know. I do know that a lot of the lot premiums that they were charging before, they're not nearly doing as much. Like, let's take, for example, Pulte. They just opened a new community, Cordora, in the Southwest off of Rainbow and Windmill, right?
Right.
And their lot premiums are between, I think, $18,000 to $22,000, which does sound a lot, but 3 months ago, their lot premiums were $40,000 to $50,000.
Yeah.
So what room do they have in those lot premiums, and can they drop, and how much can they drop is probably where any money to be made or not made or they're making up for is probably in those lot premiums.
Well, you got to remember too that a lot of the property that the builders buy is on auction, right?
Yeah.
From the BLM.
And they buy the land
Well, it's the
years
land.
ahead of
The
time.
land,
They
yeah.
buy it years ahead of time.
Yeah, they're buying it years ahead of time, and they're trying to keep up with the economy by the lot premiums, by charging the lot premiums.
Yeah. Yeah.
That's what I think.
So
And
most
so-
of the builders'
so-
cost is in their supplies currently.
Yeah, so
What
I'd
that
say
is.
yeah, because supplies, you have to figure out labor hours into
Yep.
those supplies, right?
How much supply costs and how much labor costs at that time?
Yeah, so
because the
so
land's
your,
already
your
paid
board
for.
foot,
in years.
yeah, your board foot is
Yep.
going to include your labor for that board foot too.
There was a point where
So-
every dollar that was paid out by the builder per board foot for them to get that lumber, it would cost them $28 as a buyer per board foot for $1. So like for every time they paid $1 for the builder, it would cost them $28. They would pass it. So you got to think the builder is looking at this going, okay, well, this is a perfect opportunity because you're right, Brett. They may have added some of these costs into it. I just think it's just crazy how you think that people were willing to pay it, not really understand. Like, yes, there's elevation,
FOMO.
Yeah, there's elevation. Yeah. There's strip view. There's different. Like if you're buying on a cul-de-sac, right? We get all that. But the premiums that they were asking for,
So
and
that-
people not questioning those things, was kind of a big deal.
That's kind of, so take that in reverse of what's happening right now with the fear of everybody. Everybody, it's a doomsday scenario. The market's going to crash and blah, 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 blah. But when things are going up, everyone has a FOMO.
Yeah.
Like you just said, it's crazy that people would pay those kind of prices. But when the market's going up like that and people feel like they're missing out, they will. They'll do irrational buying. Right? So it's the same thing, but applied on the opposite. When things start coming down, then people take a doomsday scenario. Yeah. And is it really a doomsday scenario? No. Are things coming down? Yes. Is it a lot more tangible for a buyer right now? Absolutely. And they're going to get a great deal. May it come down even further? Probably. I don't know how much. But regardless, it's not a doomsday scenario.
What's interesting to me,
that's just people's perceptions with markets.
That I don't know how many homes are on the MLS, but I know the homes have actually started increasing on the MLS.
They have, big time.
So then at some point it becomes a buyer's market, and the prices aren't coming down that much.
Yes.
And so you have all these homes coming on the MLS. You have a so-called buyer's market, and the homes are staying where they're at. So the sellers are going to have to.
So I would say this as a general question. If everybody would feels that if a home prices came down 20% this next year, I think everybody, for the most part, would say that's a crash or close to a crash, or probably it came down 20%, right?
Right.
I mean, 20% is a pretty big number. Well, the last 2 years, home prices have gone up over 30%. So take 30% minus 20%. What number are we at?
You're still up 10.
Still up 10%. Next question.
And listen,
next question.
Open up that pipeline. I bet you'd be even better.
Let me say this
I'm
though.
just saying.
So I think those like this.
Because
we went up 30%, dude. So even come down 20%.
So bring the gas prices down 30%.
Yes.
And there you are. You're back in it. So they need
but
to
look,
open
so
that
you
damn
have
gas
rent
line.
appreciation.
We're getting your president.
You have rent inflation, also home cost inflation going up.
Yeah.
And so I agree with what your statement is, but you also have to think that a lot of people still look at it psychologically that they lost 20% because they could have sold their house.
Like I said, psychologically. That doesn't mean that the numbers.
I get it. But at the same time, you have to be in the field and be in the data to understand it at that level.
Yeah.
Because if you're out there and you're thinking my home is this, right? You got to think that the average person out there is not looking at data and numbers and going, we went up 30, now we're down 20.
We have people every week that comment on here how they know more than us.
The first house I bought here, it was back in 97, and it was $98,000. as a consumer, as a guy who got a W-2 and with W-2 wages, I had no idea what the market was. The guy who sold me the house calls me up one day and he says, "Hey, you want to sell your house?" I'm like, "Yeah, right. What, for 105?" And he goes, "No, I can get 225 this weekend." I'm like, "You're shitting me." He goes, "No, I can get you 225 this weekend." And he says,
He
"I'll
became
get
your
you."
best friend all of a sudden, didn't
I
he?
get you, and I'll get you into another, and we'll look for another one because I could do the work on them.
Yeah.
And he goes, "We'll get you into another one for
Cheaper, and then, yeah.
cheaper, and you can fix it up
Rinse
and then
and repeat, yeah.
And so but as a consumer, I had no idea. I had no idea what was going on. I mean, one day my house, I paid $98,000, and then 2001 or 2 or whatever, he turns around and says, "Hey, sell your house for $225."
I'm not saying that the information isn't out there now. And there's a far
I think
difference
a lot
between
more
what's-
people are connected.
Yeah,
now,
and
too,
what
to
you
the
can find from
information that's out there,
consumer
'cause we didn't even
information
have
now
the
is
internet
tenfold
then.
than you could in 2000. But I think that just because you have a lot of information doesn't know you know how to interpret it correctly.
Right.
I think a lot of people have a lot of opinions about it.
Sure.
But
Well, I'm going to say this. So when we look at this housing situation and with lumber, because we're talking a lot about that, lumber always follows, right? For every data or analytic data that you have, rates have a bigger impact. They did the numbers at the peak of what the lumber costs were, where rates were at that time, was actually a lower mortgage payment than if you said, okay, now we have lumber back where it's at today at 400 to what the rates are today. It's actually a lot higher. It was like $1,000. Like I wouldn't say it was about $400 difference. So from what I was looking at, so what that means is that rates have a bigger impact on somebody's payment, but people don't understand, like, okay, lumber or these other costs, it's not just the house costs and the builder. It's like one little intricate thing that happens on these houses, or something happens with construction
effect,
or something.
man.
It's always passed to the consumer.
Yep.
And guess what? Now those payments are higher and they don't have no idea about it. They're factoring in, like Brett said, a lot of these builders are factoring these costs. So you got to look at it and go, okay, well, if the builder is raising you $36,000 or $50,000 or $100,000 based upon the market, work, they can't find contractors, lumber, whatever it is, that cost is now $100,000 on your purchase price, which ultimately drives up your payment. And it's not just rates. Rates have a quicker, sudden, like a real quick impact.
they have an
higher
immediate impact.
Yeah, a higher impact.
Immediate.
But you got to think, it's a smaller impact for lumber, but it was still an impact. People don't know
Yeah.
that's almost like a hidden cost.
It is.
Yeah.
And they don't know that.
Well, even concrete too.
Everything.
Dude, I
mean,
get it.
concrete-
Like when you
I
just
know
see the
during the
news
last
every
crash,
day, I get it. Like, I get it. So
So let's move
and
over.
they got to build in profit too. I mean, right?
they do, but I think sometimes, like Brett says, maybe it's overextended. And, it's supply and demand and market scarcity, mindset of people. I think they went a little bit too far sometimes, right?
People always do.
Well, not just people, builders. Like builders are offering, we saw it, $250,000 lot premium. Okay, in Summerlin, right? Okay, it's Summerlin, Beverly Hills. But how much factor do they, what is the profit margin on something like that where you have another builder that's doing the same thing? I've seen builders where they're building in the Southwest, they take it to Summerlin and it's $200,000 more in purchase price.
Well,
right?
I think a lot of that too, or I shouldn't say a lot of it, is I guess I'm wondering how much of that had to do with, so you had that initial phase of
Improvements.
buyers who get into contract, and then it took the builders 9 months to a year to build, but that home went up $150,000 while it was being built. So the builders have everyone locked into contract at a certain price for the lumber and all that stuff. But in that year and a half, while that builder is building that house, their supplies have increased double. Theirs have tripled on this. They've lost labor. They got to pay more for everything. So now they're actually, for what they got you in a contract for to what their original numbers were are a lot different now on their end. So now when phase 2 goes to build and they put somebody in contract a year later or no new home community, that's where they're adding on those $30, $40, $50, $60, $70,000 lot premiums is to make up for some of that difference. I just don't know how much. I don't know how much that factored into it or how much they were planning to kind of take a little extra off the top for times like this, or I don't know what it was, but I'm assuming that difference in there for the builder just running a business-wise, they would have to make up for it in
I
some
guess
shape or
what
form.
I'm saying is I agree with you. I'm just saying that when you have a market that's sweet like that, where they can offer whatever they want, not pay anybody, do the things, they got away with it.
They
right?
listen, no doubt
people have no idea.
they can totally get away with whatever number they want, and they didn't need to prove it. No doubt.
Right.
I mean, so that you're right. I mean, it could be a minimum, it could be a lot. We don't know.
So right now
know?
we're seeing quite a bit of move-in ready homes. I also want to bring up that in these move-in ready homes, I have links that's also in the comment section. And you guys, I'm doing video tours of these move-in ready homes. I'm not going to show you anything because we've seen it a couple of times now. But if you guys are looking to move into a house, they are offering incentives like buying down the rate, giving, just like DJ said,
You're pretty much covering all the new home communities as they're coming out too.
I'm covering all of them, yeah. And the thing is, they're offering incentives, a lot of higher incentives now if they're using the builder's lender. They need to push the inventory. They're taking losses on these deals. And so now they have to really try to move the inventory, in my opinion, because they have a lot of things that are sitting. People backed out, higher rates.
Yep.
I think rates are going to be, look, there's a lot of data out there on rates that said even with inflation and then raising the Fed funds rate, that inflation's not really coming down very much as they thought. Now, it could be a long game, right? The long-term game of, hey, let's see what the effects are over a few months. But in an immediate situation, it's coming down, but it's slow. It's not as fast as they would like it
Well, I mean,
to be.
listen, at the end of the day, how much of these things have some sort of backing behind supply chain issues? I mean, you know what I mean? Like, things were backed up for so long, labor, supply chain, all these different things.
Yeah.
How much is, as long as we still have issues or major issues with something like that, I don't see how it could necessarily go to the better. Unless the government prints more free money, which is why we're in the situation we're in right now, which is what we've talked about, if you rewind the tape, for the past year and a half on this show, which is they've printed what, like 80% of all the money as a country in the last 2 years.
Right.
There's going to be consequences for that, man.
Sure.
Well, and I brought this up a lot. I just look, it's kind of a hard situation though, because there's people that really needed money, like the stimulus checks, and then there's some that, they needed it. I'm not going to say anybody didn't need it, but you can't just have things like that present themselves and then not have some type of, retaliation, if you want to call it, a response to what we're doing. So taking that out, let's talk a little bit about I want to talk what Running at Altitude said here. He said, this question here, he said, is, if builder profits decline, do you think they will cut corners on materials and finishes? That's a good question.
I think
actually,
on maybe some of the quality of what they're putting in the house, but I don't think as far as work they can, because they still have to pass code by the city. There's still going to have to be certain standards that the city's going to make them have to do in order to build and to get the permit on it to legally put livable housing in there, they have to. So that's always going to be at a certain standard. However, the quality of
the aesthetics,
what they put into that house, I don't know. That could change.
Well, a lot of them are spec homes too, and they're already pretty much done. I mean, for the most part. Or a lot of them are people backing out. They're kind of taking on.
They're already done.
Yeah, you're doing a move-in ready, so they're not really going to change too much. They're not going to have to probably change too much on the materials and lose money because, like you said, it was probably accounted for. Mm-hmm. But definitely moving forward, that could be something they're looking into. I'm sure they are. That okay, we're not getting the same returns. Maybe this manufacturer, this, like you said, this company that's providing, lumber or whatever.
Dude,
now they're.
I guarantee they're going back to all their contractors and renegotiating.
Renegotiating.
Oh yeah.
I mean, I guarantee they are.
Yeah.
Know?
Well, it's like back in 2000 when KB was putting one sink in a master bathroom and you had to pay for the extra sink.
Dude, that sounds like a builder, man.
It's like, all right.
Dude, that's a builder to a T.
That's like, all right. Yeah. So let's talk a little bit of this, and then we're going to head into the market update, and I'm going to talk with Doug about a few things. So first off, let's talk about the dollar. We're going to have a very short, concise position on this. Yeah, very brief. So the ECB, which is the European dollar, is actually the euro is declined first time in 20 years. A lot of it is due because Russia may restrict European supplies for energy, right? And that's that plus inflation. We're all centrally located, not centrally, but globally located.
We're all globally connected.
And so we've had this same thing. It's weird. Just like in the housing crash, we crashed. All of a sudden, you saw other countries crash.
Yep.
Our banks fell apart. Then all of a sudden, other banks fell apart across, in Europe, China. So you're looking at this going, okay, is this going to be another big problem for them? And what is the impact it has on the dollar? Well, I think it impacts imports because it's cheaper, but exports, maybe not as good. But for your guys' opinion, like as far as what you know on the dollar, we're not economists. Do you feel like having a stronger dollar, having a predominant currency like that, especially with trading, is actually impacting our economy well?
I think out of everything that's going on in the world right now with all the different economies, we're in the best shape. That doesn't mean that we're in awesome shape and that we're not in a recession in my mind. I just think that we're in better shape than probably most countries out there.
Yeah.
So overall, my perspective is that all fiat is going to go down and continue to decline in value and power and purchasing power, which is my whole case with Bitcoin and cryptocurrencies, is keep it in fiat, and people think they're hold steady in fiat, but all you're doing is going against a winless game.
Yeah.
So at the end. So, but that's a little further depth into it. But
I get it. But the dollar is the number one currency for oil, right?
It is, and that's
how it falls. So if that falls below it, guess what? Those costs for oil for all those other countries go up, right? Which is going to hurt them. Also, you have to look at price stability and their inflation and what they're seeing, and this is the first time they're raising the Fed's fund rate, or their interest rate by their central bank in quite a while. I think they're up 12, or they're down 12% on their dollar.
So what's that mean? Explain that to us.
It just means that they're doing the same things. They're having the same inflation problems, and they're starting to see them spiral out of control, right? They're starting to see the same things. And it's like, okay, the U.S. had their issue, and everybody's sitting around looking and going, okay, well, hopefully that doesn't happen to us. 9 times out of 10, what happens?
Yeah.
They're right after, or in other countries right after, because these banks, these economies, the imports, exports, the tariffs, all these things are connected globally.
What happens here first happens everywhere else later, because that's what people understand is 1971, Nixon took us off the gold standard. And so what he did was he took us off the gold standard because, man, if we're backed by gold, then we can't just print as much money as we want when we want.
Right.
Right? That's a problem, right?
Yep.
To have accountability. So what we did was, though, is in replaces, we said that we're going to make the U.S. dollar as a world reserve currency for oil. So everybody in the world has to buy oil. They have to change their money. They have to exchange it into American dollars before they can buy that oil. That's what gave us our strength for our dollar.
Now,
you understand what I'm saying?
Yeah.
Which is everybody needs oil, but in order for you to buy oil, no matter what currency you have as a country, you have to exchange it into U.S. dollar.
Not anymore, though.
That's what allowed us to take us off the gold standard.
We got to keep going, but what's your opinion on this real quick? I mean, as far as the dollar surpassing the euro, I mean, is it really a big deal or is it not a big deal?
It's a huge deal.
I think so, but tell me why.
Well, basically the euro, if the euro's falling, the European nation's falling. Regardless whether our dollar is bigger or stronger, or
it's too much of a global world right now to be like we're number one with our dollar. Yeah, it doesn't.
And with Russia now taking rubles for oil, and on our side of it is they're shutting down land leases and they're shutting down the Keystone Pipeline and all that other stuff. So all these other countries are paying for oil in rubles. Mm-hmm. I mean, it's no longer a petrodollar. It's not, the U.S. is not a petrodollar. So it's, I think it's probably a matter of time.
I think it worked for a while, and it was a great idea for a substitute. Don't get me wrong, but I think
they said it would last for 50 years. Well, we're in. It's 71 and 21, and guess what?
So listen though, but it's still impacting the euro. I mean, I understand what you're saying. It's still. I mean, you got to look at the euro and what they're doing and how they've been. Dude, 20 years they've been higher on currency trading than the dollar. It was stronger than the dollar when you're.
So why was that though?
Well, I think it was because it all comes down to confidence, right? Mm-hmm. Investors and currency and trading.
Well, I think even the pound is down to $1.18, $1.15.
Well, that's what I'm saying is why are these why is the separation? Is it because inflation and they have you have to have there's just like you said, they have to raise their rate to tame the inflation to slow their economy down now too. So now that's impacting their currency and what their total currency value is. And I think now you're starting to see what transpires from what we did here, printing all this money, putting it all into circulation, but yet our dollar really wasn't phased. But I think the number one reason is because of oil, right? I think that's probably why our biggest impact that we haven't really suffered as much is maybe because of the oil prices and how it's backed by oil. but they have to do everything, raise the rates, and they're getting impacted because the euro's not backed by oil, it's the dollar, right? So I think that's why I'm saying I think we're going to still stay not strong, but we're not going to get hit as hard, where these other countries are going to get hit pretty hard.
Yeah, I'm not saying we're having a doomsday scenario by any means. Don't get me wrong. But you're absolutely. I mean,
things are changing.
Yeah, we'll be fine. But yeah, every other economy is going to be worse than ours.
Yeah. Well,
that's what I feel. That's what I feel. I feel you're starting.
It's
to
already
see
shown by the dollar,
the inflation. You know, the numbers.
The biggest thing people fear is change anyway. So I mean, it's changing. If you can kind of roll with the tide and see what's happening and keep your mind in what's going on around globally, I think you'll be all right.
Change isn't permanent, but change is.
All right, Brett. So we got to move here. We got to keep going. We got to get the show going. So Brett, talk to us about what's happening in the statistics. I want you to give us an update.
Whoa.
As
you
always
give me a little warning shot there to bring it up on my.
I need you to be up here and ready to go.
Holy Jesus.
Got a lot of good information on this, by the way. I want to talk about what's happening with. We're going to give you some graphs. I want to bring this up really quick where you can see it. Then we're going to go over here and talk with Doug.
Let's go over these numbers quick. So 2 weeks ago, because it wasn't here last week, 2 weeks ago for number of single families that were on the market were 5,652. Now, 2 weeks later, we're at 6,659 for an increase of 16% of homes more on the market in 2 weeks.
Holy smokes.
Last
2 weeks?
Yes. So 2 weeks ago, the active condo list was 1,381. This week, there are 1,544. So 2 weeks later, there's 11% increase. So this last week, so 2 weeks ago, the total number of homes, condos, townhouses, single family residents were 7,033. 2 weeks later, we are at a little over 8,200 with an increase of 15%.
Yeah.
Wow.
So that's what we need, though. I mean, I remember what, 4 or 5 months ago?
Yeah, but
we weren't even at 2,000 homes.
We don't need it.
That's insane.
Listen, we need it, but then we need it to slow down. We can't have an abundance of homes and it just go to 15,000.
It will.
Well, what's going to stop that?
Just let a couple months happen.
I know, but my thing is
happens every time.
If rates keep going up, my question to you is,
that's my question to you. How much do you think the rates are going to go up?
Well, it depends.
Like, I'm not trying to put you in a situation. Honestly,
what if they raise the Fed rate by 75 basis points?
Again, everybody thinks that raises mortgage rates, and it doesn't.
It doesn't.
It doesn't.
What raises the mortgage rates?
So it's the
geopolitical
news, right? That you see, right? It's all about investing. Corporations, countries, not just countries invest into our bonds,
right?
2 year, 5 year, 10 year, right? So 30 year. Here's the deal: is that you got unemployment numbers, you got economy, inflation. A lot of these things impact what mortgage rates do. So just by raising the Fed's fund rate, now what that does is it slows the economy, pulls out dollars, more dollars out of circulation, slows it down. But at the end of the day, that doesn't really impact what rates are going to do. So what we have to see.
What do you think it's going to go to?
I feel that. Well, here's what I think is if inflation keeps going up, our economy still stabilizes. Because look, they've raised the Fed's fund rate, and inflation really has come down a little bit, but not to the numbers that they thought it would so quick. Right? This might be a long game, like I said. I feel that if we start to see the data where you see investors, because it's an inverse relationship, but if you see investors risking their money, putting it into bonds because of more of a safe haven, then they're probably going to sit on the sidelines and wait to see what happens with rates. What I feel that rates are going to do is I feel rates are going to probably kind of settle in, maybe come down a little bit. The thing that would change that, though, is if the economy, like the employment or the inflation keeps going crazy, or geopolitical news happens where we have, because you got to think, we have a war. Normally that's a good thing for rates. Investors will put their money into bonds and it'll lower and suppress rates. We're not seeing that. They're still steady.
So let me ask you this: if things turn for the worst,
we don't have a war,
and we're not talking about something like 07, 08, okay? But let's just say that things turn for the worst. Sentiment overall is still down and turns even more for the worst. What do you think realistically would be around the highest we would probably go to, given within the parameters of everything?
So
8%, 9%.
So what the Treasury and what you're looking at with bonds is that you're enticing investors to buy into bonds, right? So it's an inverse relationship typically with the bond market. As the bond price goes down, interest rates come up. Inversely, if the bond price goes up, rates come down. So if you see what's going on in the economy and investors see that the economy's not doing well, they might buy into the bond, right? And say, I'm going to put my money there because it's more of a safe haven. That would have an inverse relationship if rates are going to come up.
Okay,
or down.
again, so what do you think
like I said, I feel that the rates are going to come down slightly, but we have to wait to see what data comes out furthermore in the future, especially after this inflation report, or not the inflation, but where they raise the Fed's fund rate. Because
when do you think that timeline's going to be? We would find out.
I would say you're going to probably see a difference in 30 to 60 days because it's going to determine. Everybody thinks like, oh, this once they did this is what's happened. No, they're doing things and then sitting back and evaluating, going, okay, what's happening? What's going on? What's the psychological impact this is having on people?
That's exactly what they're doing.
And then the other thing is like, okay, did we tame inflation? Have people stopped going out and buying things, right? Have people stopped traveling? Have we, has things starting to come down? Ultimately, they want that 2% target rate, right, for inflation. They're nowhere near that right now. No, nowhere near it. So you can say, well, they can raise the Fed's fund rate and it'll be the same thing. Not quite. We got to see what's going on. What?
He's right. He goes, the dollar is strong. Good time to go to vacation in Europe.
100%.
It is, actually.
That's awesome.
If you can afford it.
Yeah.
So go back. Do you have anything else to say about your report? You kind of got me off topic here.
That was funny, dude.
Yeah, you got me all sidetracked over here.
I did not. You always get sidetracked. You need ADD. You have ADD. You need riddle, whatever it is. Anyways, sorry. All right, so total active foreclosures. Last week or 2 weeks ago, I think there were like 18. There are 34 now. Again, I'm seeing a lot of the HOA foreclosures.
Yeah, but how much? I mean, that's not really...
That's nothing.
That's nothing.
That's nothing. I'm just saying of that. That's... So, yeah, 3,400 homes out... 34 homes out of 8,200 is...
That's
about the odds of dying from Corona. Anyways, so coming soon is we have...
Great, Brett. Now you're going to take us off of YouTube. See how he's always... Every show, man, it's got to be like you cross the line.
I just had... I couldn't help it, man. It just came to me on the spot. I'm a natural smart ass.
Pull FWD.
I'm natural at it,
off
man.
the show.
All right, so coming soon, there are 192 properties coming up this week. And I stopped doing the 60-plus days on the market. Let's get to more important things like 90-plus days in the market, 585 homes, and 120-plus days are 362 homes. My name's Paul. I'm just between y'all.
I know a long time ago, what they used to do is they used to take these $1 million homes, and once they bought them, they'd put them on the market and just let them sit there until somebody buy, because they had a price that they wanted after they bought the home.
Yeah.
And then if
I've seen that, man.
Yeah.
And if you go to the ones that have been sitting there, a lot of them, like one of them on there has been sitting since
2014. Yeah.
Like, no kidding. I can show you. It's been sitting there since it's been active on the MLS since 2014.
But say they buy a $2 million home and they want $4 million out of it. Well, they go and put it on the market for $4 million, and once they get the hit, then they get, it might take 2 years, 3 years, 4 years.
Yeah, and then the listening agent gets to hear it every week for 2 years. Why is my house selling? This is my house selling. Why is my house selling? Because it's overpriced.
People in that range actually know that they're not going to sell it.
I know. I'm just kidding. It works differently at luxury.
I just want to bring a couple things up here, guys. So let's go over here really quick. So this is the all of the listings. I think this is what we're looking at. The price per square foot. Let's go over here and look at the sales price. And we'll just do single family residence. We're at 480, right? So that's pretty.
That's pretty even though. It's
pretty standard strong. But you can see, look at it's flatlined, really.
Yeah.
I mean, if this is like for like the last week, I guess you can look at.
So think about that. Homes
actually last month.
Homes on the market.
It's flattened.
Homes on the market have doubled in the last 2 months.
Yeah.
Yet the price of the home has stayed the same.
Yeah. So look at, we got that, and then you have new listings coming on the market.
That's
look
not
at that.
an opinion. That's a fact.
That's a fact. Look at this. 4,994 homes, new listings on the market. That's a huge number, man. That's a pretty good size.
Look at where it was in December.
That's what I'm saying. Look at it in a short window. I would like to know what that
so
change.
It's doubled, but yet the price of the homes have stayed the same.
Yeah. Then you have here. Let's do this.
That's a sign of there was so few supply.
If you want to go all types,
still
this is how many homes we have on the market of all types of homes. 8,820 homes on the market. That's for all types. If you want to just do single family residence, I mean, look at that number. It's just shooting up here. 6,493. So that's a pretty big deal.
That's
look at this
that,
other
light
thing.
up.
2.2 months supply. Man, I could
That's
see,
what we need. That's what we need, man.
we saw it at 0.5 for so
Yeah, we needed to keep
long.
going up.
It was just crazy.
Dude, I will start feeling good about things when we're about 4 months.
Days on the market, we're still at 8, and then we're not going to go over the price per square foot because it does change. But percentage at list price, you're still getting 100. So what does that mean? People always say, we just talked about it, right? Why are prices staying the same even though we see less homes being sold, right? Because people still are willing to buy these homes. The demand is still there. There's just not enough. But you can see that it's 100%. We're having an increase in homes. What did you say? In 2 weeks, we had 16% increase in homes.
Yep.
We have over 8,000 homes on the market.
But yet the sales price stays the same.
But it stays the same. So people are still willing to buy.
Because we had such few supply that even when you double it, that's still not what you need. That's still a short supply.
So
compared to the buyers. So I know a lot of people aren't buying, but there's still just as many. I can tell you firsthand that right now I'm dealing with a lot of investors from California who purposely didn't buy in the last year and a half because they're cash. So they don't care what the interest rate is. They're just not going to buy in a market where people are paying 30, 40 grand over. They don't need to, nor will they want
cash
to.
Investors are
so
really
now they're
the ones,
coming in and buying rentals between 5 to 700,000, and they're buying rentals for a good price right now.
They got
and getting
cash
it
flow.
even cheaper. Cash closing right away. They're getting good deals and renting them out right away.
Yeah.
That's who's buying.
Cash is king a lot of times, especially in this market. I think I brought up a video on this, so if you guys want to check that out. I also have 2 YouTube channels, LV Crib Tours, so I'm doing tours of homes on that channel. Also on the Sound Off, bringing up a lot of stuff about what's happening in the market and everything in Las Vegas. Want to segue over to Doug over here. So Doug, let's talk a little bit. Doogie, Doug or not, man. Let's kind of finish this up here and just kind of go on with our weekend. So first off, happy birthday.
Thank you.
Right, again, belated birthday.
Thank you.
So let's talk a little bit about home inspections and why some people you pay for what you get. I would say a lot.
Yeah,
where,
that's really true.
So talk a little bit about that.
Okay, so from what I've heard, I talked to one guy that moved to Oklahoma because he was pulling less inspections over the last couple years and so he
You're
moved
in
to
Vegas?
Yeah, yeah, and I don't know, a whole lot about. I don't really associate with other home inspectors, but the thing that I've heard is that you can either get a complete, like more of a thorough inspection. Like when I go through and do a home, it's like every outlet. Walk the roof.
Yeah.
It's like open doors, closed doors.
You
that
do
kind of
everything,
thing.
yeah.
Everything.
Yeah.
And then the thing is when you have somebody that's experienced, you've seen a lot of things in a home, and especially I've done remodels, renovations, and stuff like that. And I've also worked in the construction industry where we did the inspection on the post-tension slabs, or we did the grading.
What's a post-tension slab?
A post-tension slab is a concrete slab that actually has cables running through the slab that are stressed at 30,000 psi.
So it allows it to expand.
Well, it allows it to crack and not settle differentially.
Yeah. It allows it.
Yeah, and it allows
movement,
the whole thing to
breathe.
settle and raise at this, the same kind of the same altogether.
It allows it to breathe and balance itself.
Well, it allows
In a
it
sense.
more than anything. It allows it to settle and not have any differential settlement.
Yeah.
And then so I used to do a lot of that, and we did the grading inspection. So the thing that I like to tell people is that I can bring a whole lot more. A lot of people can go through and check outlets and turn appliances on and stuff like that. But the fact that I've got the knowledge behind both commercial and residential from the ground up construction, and that's what I did since I've been a consultant or engineer or inspector since 94. I started in 94. So there's a lot of things that I've seen and a lot of different conditions I've seen and the way things work. So I can also bring a lot of knowledge and to what people don't realize or even think about, So
Yeah, you're very well versed. So when you
Yeah.
go through the inspection, you're pointing out everything because I've had you do home inspections for me.
Yeah.
But there's things on there. It's like, hey, this is just a cosmetic thing. It's nothing big, but just so you know, in the road down the future, you might want to do this because it's going to do that. Like you give tips, you give kind of.
Yeah, here's what you got. Like just going back to the post-tension slab. I got caught in a deal where the house was built in 2007, and I was doing a lot of that post-tension work. And I thought everything was post-tension cable. Well, come to find out, over in Lake Las Vegas, not everything's post-tension cable.
No kidding.
Yeah.
I didn't know that.
I didn't know it either because
Why?
I don't know. Because City of Henderson didn't require them to get a post-tension cable slab.
What? Why would they not require that?
I don't know. But anyway, what happened was I put it in the report that it was a post-tension cable slab because everything from 93, 94 on was all post-tension cable.
Why would you not?
And that I had seen, and I'd done a lot of work in town.
Yeah.
And they went to the building department. The building department pulled up the plans and said, yeah, there's no post-tension cable in here. Go ahead and cut the slab, whatever you want to do. And so that's what they wanted to do. They wanted to cut the part of the slab out and build onto the home. And it was not post-tension cable. So what I do now in the reports is this was built in the era of post-tension cable. Make sure you get it checked out before you cut or cord a slab.
Yeah.
And so but anyway, I put things in and I got what I do is I put in the report I put marginal items and I put defective items. Main thing is you want to take care, like you were saying, you want to take care of the defective items because that means they're not working. Marginal items are okay, so you're missing some weather seal around an exterior door.
That's why I like you to do a realtor summary. I just go right to the summary.
Yeah, exactly.
These are things to discuss.
Yeah, exactly.
That is like all cosmetic that don't matter. Yeah,
and it's a pretty easy report to read too. So it's, but that's why I try to be as informative and basically my reports. Actually, I write my reports so it can be kind of like a punch list for people. Okay, I can get this, and this done by the seller. Now I've got this left to do for myself. So here's what do I want to do?
Here's what really matters. Here's what doesn't.
Yeah.
Yep.
Yeah.
Real quick, I want to ask you, what's your Instagram account? Because I'm going to go back to this.
Vegas Crypto Agent.
Yeah, I put that in. It's right here, right? Is this it? Vegas Crypto Agent?
Oh, that's the website. You got to go to Instagram, though.
I don't know how to do that with Instagram on here.
You're right there on Instagram, bud. Click on it.
Right here.
There you go. Now type in Vegas Crypto Agent.
Vegas Crypto Agent.
You asked for that's my Instagram. You asked for it.
Well, I'm going to go back. So Doug, keep talking, man. I want to know what people have issues with as far as.
I think most of the time people have issues with the roof and the AC. I mean, those are two big ticket items.
Yeah.
And the thing to remember about AC is it's a mechanical item, and during the summer is usually when they go out. They because that's when they're working the hardest.
Yeah.
And so I could do an inspection. You're getting good splits, and a split is actually the temperature difference between the return air and the supply air.
Right.
Well, you just had that on the last one that you did for me.
Yeah.
Where they had the difference that was too much.
Yeah. It was. It wasn't enough.
I had to pay the plumber like $700 to get an SOB fixed.
Oh, really?
That and another thing on the water valve.
Oh,
well, we got it closed, so I'm just
that's
saying.
cool.
Thanks, Doug. Just kidding.
You're welcome.
Just kidding, man.
Doug or not, baby.
Yeah, I know, right? Well, good, bad, or indifferent. I always try to deliver.
I know.
Yeah. So I mean, and then the other thing is too is one thing to remember too is that these houses are getting older. Some of the older houses they have galvanized pipe in them, right? Drain pipe. And so when you're looking at some of these homes from the 60s and 70s, that galvanized pipe may be rusted out, and it's still flowing, but it may be rusted out. So I'm actually anything older than 20 years now, or if I have plugged drains in the house, I always recommend scoping the drain line by a qualified plumber. I mean, get a plumber, have them go out there and they can check for anomalies, breaks, and bends and whatever. Doesn't mean a lot of times what they'll do is they'll put like this big vegetation thing in the front yard and trees.
Or big ass trees and the roots grow right into it.
Yeah.
That's what people don't understand. It's the dumbest thing, man.
Yeah.
All these people have these huge trees in their front yard.
Yeah.
And especially the older ones.
Yeah.
roots of the tree growing right into their sewer, man.
Well, and the thing is, palm trees aren't bad. But when you start getting into the hardwood trees, the ash trees and magnolias and stuff like that.
Yeah, I'm not talking about palms. I'm talking about like regular trees, dude. They literally, you can see in some of them, you can literally see the roots going right.
Well,
those
mesquite trees are, the ones that grow sideways.
Yeah,
they push up driveways. They they do
a bunch of non-thinking going on in that one,
right? And so that's the one thing that I do. As well as I think that's the three most. Or actually, there's one other. Always check the water meter to see if we got any water running in the house, because when you have a slab leak, that's a $5,000 bill right off the top. And so if anytime the water meter is moving, when all the faucets are off in the house and there's no water running in the house. We got movement. I always call that out. I had just had one the other day. The thing was spinning like a freaking madman, and I couldn't find a leak. So I have a feeling they had maybe a
$5,000.
Yeah, because
that's a quarter of a Bitcoin.
I know, right?
Dude, you can't go through a show with Brett without talking about Bitcoin.
I know.
Or talking about Madison, Wisconsin.
I know.
And I love that about you, Brett. You know what I mean? Like I'm
me to a core, man.
So let me say this. So a lot of people want to know. Like, why would they hire an inspector like you? Maybe a little bit. I wouldn't say you're always more. So it's case by case. But let's say sometimes you're priced out a little bit higher. It's because you're getting that professional job. You're doing a thorough job, right? You're going through the process of seeing a home. And you're catching a lot of things that maybe, I'm not going to say people are average, but you pay for what you get in this world.
Yeah.
Right?
Yeah. You got, I know there's, I have listing agents that tell me, my inspector goes through a house in an hour. And I'm like, I can't, let alone try to do part of the report at the house. I can't even go through a house in an hour. I mean, it's like a condo maybe, but but a house.
I mean, you went out to Pahrump, man, and you did a spread, and you're like, all right, this is gonna be an all-day job. I'm driving down there. It's an older home. I'm like, so how long is it gonna take you? Like, I don't know, 4 or 5 hours. I'm like, man, that's crazy. Just on one house, 4 or 5 hours.
Yeah, and I don't know how you climb into a crawl space. It usually takes me 15, 20 minutes to get in and out of a crawl space.
Do you have to get greased up? Like, put your body...
Maybe if you're the size of a horse jockey or something.
Yeah, right?
You're like 5'5", you in and out.
He's like, all right, well, it looks like...
The dog's all...
6'8". Yeah, you're 6'8". Oh, yeah. It's funny because backing out of a crawl space, man, I got to do push-ups to get out of a crawl space.
Man. All right, come over here.
So,
we got to get greased up here.
Yeah, right? So I mean, the amount of work, and then, and I've got a process I go through it. And the thing is, I see it day in out.
Yeah.
And it's like you get used to the routine, and then you see something that's not right. It's like the other day I had a panel sitting on the ground. It was like maybe a foot off the ground. Electrical panels. Well, electrical panels are supposed to be 4 feet off the ground. I mean, that's just common sense, right? I mean, you look at it, you're like, oh, something's wrong. And the big thing is, learned this back when I was rigging on C-130s, is if something doesn't look right, it probably isn't. Yeah. Because when
if it seems too good to be true.
Yeah, right.
It is.
When you're rigging shoots on for an airdrop or something like that, and something doesn't look
feel right,
you better check it out.
You don't want
to
jump, bro.
No.
What if something's clanking? Does that sound usually like a sound that something's like there's some issue, or like what do you like think about? Like, oh wait.
Well, the clanking, the biggest thing that I found is like water hammer. So when you have water hammer in the house, you have the water's running through the house.
Yeah.
Well, that's an easy fix. You just put an expansion tank on the water heater, and that usually takes care of the deal. So yeah. So when something's clanking, something's not right. The air conditioning motor is squealing.
Here's how I fix it. I just go over there and hit it on the top a couple times.
Well, that's what a lot of times, if they don't hit it, they kick it, right?
Time to give those water pipes a timeout.
Yeah, right?
You hit it a couple times, it's like, oh, I fixed it. I'm good. Let's go on with my business.
Right, yeah.
So anyways, we'll get going on this. Doug, you have any last words on this one?
Nope.
Okay. I want to come over here. I want to bring up Brett real quick, and I want to bring up, see if he has is this a video, Brett?
I'm just doing those quick little things.
Oh, I want to hear it, though.
You just got to go to Instagram...
What is
trending
this?
reels?
No, I want to hear what you have to
Because
say on this.
If I go on there and actually say something meaningful,
What's
and
this?
it takes 45 seconds or a minute, I hardly get any views. If you go on there and do something stupid for 6 seconds, you get like thousands of views. Welcome to society. So I just do it to get eyes on me, basically.
I want to hear.
I gotta interpret it with Bitcoin, so that's what I do.
What? So where's one where you can like really like freak out? Is this one?
No, I don't freak out on any, dude. I mean, when I freaked out on the
hold on.
show, I don't like make those as my highlights.
I want to hear this real
so I
quick.
can piss off even more people.
Who's driving who's driving the car
Yeah,
there?
somebody's driving the car over
What
here.
car?
60% of the time, it works every time.
Every time, bro.
Look at you, bro, with that confident look.
Yeah.
Hold on.
So we can get off this. People know to go with it, dude.
If you guys want to check out Instagram, this is Brett Shitty right here. Vegas crypto agent, baby. And look how many followers, man. You got more followers than anybody I know. I mean, over
I don't have that
4,000?
many, dude.
Dude, you got a lot, man. What do you have to say for yourself about that, Brett? He's like, I don't want to say anything.
I post every day. I try to increase the engagement every single day, man. That's what I work at.
Brett's a real estate agent too, and you have a website. What's your website? Vegas Crypto Agent?
BrettJenny.com.
All right. And then one last thing, you have a website too. So we're going to have all this information on the show in the comment section, guys. We're going to end the show. You guys, thank you so much for tuning in. If you guys have any questions, like, subscribe to the channel, check out D for Dentist, check out all the comments in the comment section, all the links that I have. And that's it, guys. We're going to end the show. You guys have a great rest of your weekend. We'll see you guys on Tuesday.
Buy Bitcoin.
Thank you for watching the French Workbench Podcast.
Nice.
You can find us here every Tuesday at 6 p.m. and Saturday mornings at 10 a.m. to find out all the information on real estate and financing here in Las Vegas. Also, check us out on our LB Home Professionals website. You can find your future home there. A lot of good information.